Oh, it's a real estate frenzy out there. I don't know if you've noticed. And unless you're going to pay all cash, you're going to need a bank. But which one? Hello everyone, my name is AlexBeltran and I talk about real estate tricks, tips, and topics. And at the risk of sounding like a broken record, hit that subscribe button. I don't know how to do that echoing sound on Premiere, so that's my failed attempt. The very first thing you need to know about banks is fuck banks. One of my favorite scenes in any sort of financial movie is in The Big Short, where Brad Pitt is trying to unload his securities in some random bar in England.
No, we want at least 100 million.
100 million? What are you, a drug dealer or a banker? Because if you're a banker, you can fuck right off.
The British are so eloquent with their swearing, aren't they? In case you haven't seen The Big Short, I highly recommend watching it. Apart from it being a financial movie, it's actually objectively a really good movie. You really want to know how horrible banks are? You're going to end up putting on a tinfoil hat after you take a deep dive into fractional reserve banking, or how frequently banks get caught laundering money for criminal enterprises. Just make sure to watch my video beforehand. But much like that old saying, if you play with fire, you're going to get burnt. You have to take that same approach with banks, because on one hand, banks can hurt you if you don't know what you're doing, if you don't know what to ask, and if you don't know where you stand as a client of the bank. Knowing these things will allow you to use the bank to your advantage rather than fear, much like how fire can also cook your food, keep you warm, and thus keep you alive. The bank can be the fire that also illuminates new roads. One of the major things that you have to know about banking is that it's their job to make money off of lending you money. They don't have a fiduciary duty to you. They don't care if the payment is a bit too high for your budget. Once you understand this, you will realize when they're trying to unnecessarily upsell you. Oh, no problem. We can easily finance you an additional $10,000 to $25,000. And they're taking advantage of this sales frenzy going on right now because they know that a lot of people are desperate. But before you buy, well, realistically anything, but especially real estate, because statistically speaking, the most expensive purchase a person will make in their lifetime is their home purchase, you have to run the numbers. You have to set up a budget. How strict or how flexible you are with your budget, 100% up to you, but realize these numbers so that you don't get upsold unnecessarily. The next thing you have to do is read the fine print. A lot of people right now are not reading the fine print because of the record low interest rates. And this is the time when a lot of lenders start sneaking in some fat fees because someone has to pay for their expensive coke habits or their side chick's apartment. And what better than to have the people that do not read the fine print pay for all that? So always ask for the loan breakdown or the cost sheet and actually look at it. The next thing you're going to want to do is shop around. A lot of first-time home buyers go to the bank that they are currently banking with, and that may turn out just fine, but you should always shop around. There are banks that specialize in different types of loans. Like I mentioned earlier, purchasing a home is statistically the largest purchase that a person will make in their lifetime. You're going to want to shop around. You're going to want to submit your docs to different lenders and compare and contrast these loans and make the wisest decision possible. And here's the breakdown of the different types of banks. You're going to have the big banks like JP Morgan Chase, Bank of America, the large national banks. A little bit on the side note on the big banks, I want to give an extra fuck you to Wells Fargo. Don't ever use them under any circumstance. They will find a way to ruin you one way or another. Then you have local banks and credit unions, where just kind of general rule of thumb, this is where first-time homeowners should kind of focus their attention the most. For the most part, credit unions and local banks are operating on a completely different wavelength. They're pretty low pressure, and they tend to break down the process a little bit more than the larger banks. They also happen to have a lot more first-time home buyer programs for first-time home buyers. There are pros and cons to these down payment assistance programs. For the most part, they do have higher interest rates, but you already did your budget, so you should know if this works for you or not. And then there are private lenders, which are, very hyper-focused on a certain type of borrower. And this is where you get like the hard money loans and things like that. But try to check out at least one or two of these different types of banks to see what works best for You. Except Wells Fargo. We already talked about that, right? Because the bank that you are banking with is banking on the fact that you are banking with them and using your banking with them to mask the fact that they are removing money from your bank account unnecessarily, because that's just the type of scumbags that banks are. You know, those little unnecessary charges that they take out from your bank account? I mean, did I mention that they don't have a fiduciary duty to you? In case I didn't, I'm pretty sure you're starting to get the picture now. By shopping around, you will know when a particular lender, be it your personal bank or a private bank, is trying to put the wool over your eyes. Now, when you're shopping around, banks will be more than happy to give you their cost breakdowns, but they will write it at their convenience. Because every bank calls everything different names, and yes, they do this on purpose. I mean, at this point, are you really surprised at this behavior? What you're going to want to make sure is that the purchase price, the taxes, and the insurance are all the same numbers on all the quotes that you get. Because they will say something along the lines of, oh, we're partnered with ABC 123 Insurance and we get a better rate with them. They put those better rate numbers in there so that they can hide all their other hidden fees. By keeping the purchase price, the taxes, and the insurance numbers the same, you can equally compare one bank to another. Now let's get to some of the questions that you should be asking your lenders. Number one, what is their interest rates given your credit score? Now this is going to vary depending on what type of credit score you obviously have. When you have a lower credit score, for the most part, the higher the interest rate. Number two, what are the banking fees? Look, at the end of the day, banking is a legitimate business and it's only fair that they charge for their services, but don't let them add unnecessary fees like my wife left me yesterday fees or the copier is out of ink fees. And look, I know I'm being ridiculous right now, but I assure you there is a point here. But they just call these fees different names so that you are none the wiser. The most common fees that banks tend to charge are the origination fee, the processing fee, and the underwriting fee. Now, depending on which state you're in, they are charged in different ways. Sometimes they roll them into the loan. Other ones you have to pay up front. Check with your lender and your local state to see how that is broken down for you. These fees are going to show up in a little number called the APR, which you're going to want to compare that to the interest rate. The higher the APR number, the more hidden fees they slipped into your loan. Yeah, do you see how easy it is to get burned if you're not paying attention? It's kind of like a really bad Chris Angel magic trick. The difference is that the banks are successfully fooling the majority of people. Number three, this isn't so much a question, but more of a quality control. You want to make sure that the lender that you're working with is actually going to do their job, because as a real estate agent, we're constantly hustling, like nonstop. And 9 times out of 10, metaphorically speaking, real estate agents are the border collie that is herding the lazy sheep to the close of escrow. At the end of the day, you are dealing with a banker who chose that job because it is a snooze fest. They get to clock in and clock out, and whatever happens outside of their banking hours, they do not care. You want to make sure that the banker that you're working with is going to actually do their job while they are on the clock. Oh, the headaches. Oh, the headaches that come from lenders. Now, it's hard to get this particular information beforehand. This is where a good real estate agent really comes into play. A good real estate agent should be able to point you to a really good lender. I mean, real estate agents do have a fiduciary duty to you after all. Number 4, it never hurts to ask for first-time homebuyer programs. Some banks offer a lot of help, other banks offer no help. Regardless, always read the fine print. Once you've chosen your lender, get out there and buy some real estate. Or don't, whatever. I'm just some random guy on YouTube. It's not up to me to tell you what you should and shouldn't do. But you should probably really go out there and buy some real estate. And question of the day. What are some good experiences that you have had with the banks? Go ahead and comment in the comment section down below. The funnier, the better. Other than that, if you want to catch some more of my real estate related content, somewhere around there. If you want to get a hold of me, Instagram is probably the easiest way to do so. I use that the most. Other than that, I will catch you guys on the next one. Deuces.